like the importance of hard work and being a person of strong faith. Sadly, my mom never got to see me grow up to be the person I am today. She died of colon cancer when I was 12 years old. Things could have gotten tough for me, but my mom made sure that didn't happen. Her life insurance allowed my grandmother to keep me in Catholic school, where I continued to receive a great education. When I turned 18, I didn't have to pursue a pro career right away. I had options because my mom had planned ahead. Today, I'm married, the father of 2 beautiful children, and like my mom, I own life insurance to make sure the people I love will be provided for.
All right now.
Life insurance gave me the foundation to move on in my life, and it can do the same for your family.
Learn how life insurance can...
And I'm going to play that again for the folks that are not listening. Good evening. Good evening. It is raining in New York City, but that is not stopping us. Shout out to everyone on IG. Shout out to everyone on Facebook. Thanks for joining us live on the platform. If you guys want to get into the Zoom, all you need to do is click the link in my bio, okay? Those of you on IG, click the link in my bio. Those of you that are on Facebook, scroll up or down, look for the feed that has the link and get on in the room if you want to see what we're looking at. So I'm going to play this again. This month is dedicated to Life Insurance Awareness Month. What that means is all month we're going to be talking about life insurance. So I'm going to play this video again. If you do not know who Lamar is, Google him.
And I was raised by my mom, who worked as a corrections officer in New York City. She had a great spirit about her and taught me many valuable lessons, like the importance of hard work and being a person of strong faith. Sadly, my mom never got to see me grow up to be the person I am today. She died of colon cancer when I was 12 years old. Things could have gotten tough for me, but my mom made sure that didn't happen. Her life insurance allowed my grandmother to keep me in Catholic school, where I continued to receive a great education. When I turned 18, I didn't have to pursue a pro career right away. I had options because my mom had planned ahead. Today, I'm married, the father of 2 beautiful children, and like my mom, I own life insurance to make sure the people I love will be provided for. Life insurance gave me the foundation to move on in my life, and it can do the same for your family.
Learn how life insurance can protect the ones you love. A public service message from the nonprofit Life Foundation.
Awesome, 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 awesome. Let's get started. Good evening. Hope everyone had an awesome day. Super fired up. My name is Odetta King, Senior Marketing Director with World Financial Group. And listen, y'all, this month I'm even more excited because I get to talk about one of my favorite topic, which is life insurance. You guys just heard a clip from Lamar, who unfortunately, yes, at some point we all got to die. But, the folks that we leave behind, it's truly a blessing when we know they don't have to struggle. And like Lamar said, because of what his mama did, he had options, okay? Options. So, my name is Odetta King. My parents, when they came here from Guyana, different mindset. We don't buy life insurance in Guyana. It's not a big deal. We're so used to the status quo of when somebody dies, you just beg and hustle up some money and you bury your loved one. And that's it. That is it. But what happens after? What happens after you bury your loved one? What happens to their kids? What happens to their spouse? How does life continue, especially if you have kids? Forget the spouse. I'm talking on the kids' side. What happens when we pass away and we leave minors? Or maybe they're young adult, 18, 19, 20, 21, right? What happened to them, right? I hate when I hear people say, oh, they'll figure it out, right? Like they'll figure it out. How selfish is that, right? I've had professors who told me, listen, they're gonna figure it out. And I'm like, wow, that's kind of selfish, right? So the way you think, like me, welcome tonight. We're going to be talking about life insurance. And life insurance has evolved, guys. 20 years, my first response would have been, I got my burial money. Why do I need life insurance when I got money to bury myself? Well, You don't know what you don't know. Because the rich people don't buy life insurance to bury themselves. Oh no. We buy life insurance now because now we know better, and we buy life insurance to increase our net worth. Yeah. Life insurance is one of the quickest and instant way that you can increase your net worth. First thing, life insurance also helps you to have more money, right? Because if you know what we know, which we're about to share with you guys tonight, there's different types of life insurance that you can save and invest your money in tax-free and risk-free. So it doesn't matter what's going on with the stock market, your money's not losing. It doesn't matter what's going on with the economy, you're not losing money. On top of it, this money is growing tax-free, right? So most people, they don't know about those type. They just know about the burial type. You buy a policy, you live, you die, money goes to your family, so there's nothing for them. And this is why there's been a negative connotation in our culture. And I'm going to say culture because other culture, they figure this out. They know what time it is, right? When a baby is born, they get a policy on that baby. They've known about these things. It's us, our people, our culture, right? That don't believe in life insurance, number one. And then the type that they buy, number two, they're not reaping the benefit for themselves. And that's why they're like, well, let them figure it out. Just bury me, okay? Just bury me and they'll figure it out. So I'm here tonight to share 3 money rules, right? And you may be saying, I don't want life insurance. I don't care about life insurance. Well, if you're saying that right now, it's because you don't know what we know. You don't know what we teach our community. Because anybody who knows this information will never, ever say, I don't want life insurance. When you know what we know, oh, you want a lot of this, right? You want a lot of this type when you know what we know. So 3 rules of money. When it comes to your money, the first thing you got to do is get your money to double. And double in your lifetime, double quicker, possibly. So the formula for that is called compound interest, rule of 72. Uncle Albert Einstein is the one that created this rule. So he said, in order for us to know how many years your money is going to take to double, take the number 72 and divide it by whatever interest you're getting. So if you have your money in the bank, most of you may or may not know, the bank is giving you a whopping 0.06%. Yes, 0.06%. Not even a quarter. Hey, Carrie, shout out to you. Thanks for joining. So that's not gonna double ever in your lifetime. So let's say for easy math, we make it 1%. 72 divided by 1% is 72 years. So this is the first problem we see why people are broke. Why people are not growing and doubling their money. Because I don't care if you have $1 million in the bank. $1 million in the bank at 1%, your $1 million is going to take 72 years before it doubles to 2 million. Right? So what if you're getting 4%? 72 divided by 4 is 18 years. A lot better, right? So if you have 10,000 today, growing at 4%, in 18 years it doubles to 20, and in another 18 years it doubles to 40,000. So guys, what you're learning right now should like have bells ringing in your ears. If you have money sitting in the bank earning less than 1%, you are losing. You are losing the money game. You are so losing if you have a lot of money sitting in the bank and it's just like not even doubling ever in your lifetime. Now I'm going to go all the way to the far right. What if you're getting 12%? 72 divided by 12 is 6 years. So now every 6 years, your money's going to double. Guys, how many of you have been in this country for more than 6 years? If you had known this information, look how much time your money would have already doubled. I've been in this country over 20 something years. If I knew this when I first came to America, holy moly, I would have been a multimillionaire by now. If I just applied this one rule, the rule of 72, right? Just this one rule. This one rule alone is a game changer because it lets us know that we got to look for vehicles that are going to give us a high interest, right? So we can forecast how much money we're going to have in the future because we can know we're going to double it in X amount of years based on the percentage. Now, you see, a lot of us don't know this rule. And because we don't know this rule, we are losing the money game. And guess who's winning it? The banks, the credit card company. Because when they lend you or loan you or give you a credit card or a loan and they're charging you 12%, their money is doubling every 6 years. So they loan you $10,000 or they give you a credit line, credit card, or whatever the loan is at 12%. Every 6 years, their money's doubling. So let's say you have a credit card with whatever bank. You borrowed $10,000. You don't pay back this $10,000 in 6 years. Now you got $20,000. But because you don't know this rule, you're going to be in a hole. You're going to be in a hole. And I used to wonder, how is it that people are in debt for so long? And it's like they can't seem to get out of that hole, right? How is it that people are in debt for such a long time and they can't get out of this hole? That's because they don't know this rule. They don't know this rule. If you know this rule, and anytime you're borrowing money, divide it by the percentage and pay it off before it doubles, right? So the first rule to money is to get your money to compound, right? When you're saving and investing, so you want to be looking for high interest. Now, if you're borrowing money or it's a loan, you want to make sure the interest is super, super, super low and pay it back before it doubles. Everybody good so far? Rule number 2. Well, you know what? I'm actually going to stay on rule number 1. So today was my first day teaching on campus. And I polled my students. I said, how many of you are here on scholarship? Your parents are paying for this seat in this class? Or student loan? First time in my career, I was so happy to hear about 80% of my students this semester got scholarships. They got scholarships because they have high GPAs. I have such a bright group of students this semester. 80% of them earn scholarship, and about a good handful of them, or a dozen of them, either their parents or a sibling attended the university. And because their parents or their siblings, I think there was one guy, both his mom and dad went to the university. So if you had a family member or your parent who went to the university, that right there gives you a scholarship, right? And then of course their GPA was over 3.5 or 3.4 and they got more scholarship. Now the university that I teach at, it's about $60,000 a year. So I said to them, okay, you got to keep your grades up every semester because there goes your scholarship, right? So because they're getting free money, right? It's good, but they have to do the work. It's free money, but they got to do the work. They got to keep their GPAs up. If they don't keep their GPAs up, then, hey, one semester they may have to pay out of pocket. And if they have to pay out of pocket and their parents never saved or it's not enough, what do you think is going to happen? Student loan kicks in. Student loan kicks in. And unfortunately, a lot of them are freshmen, so they have no idea what they're going to study. They're undecided with their majors. And I'm like, y'all better get this stuff real quick. Because if you're undecided, you can't take like 2-3 years undecided. So by the end of this year, you need to know what you're doing. Time is money. Because if you're going to be here for like 2-3 years and you're undecided, you're going to have a lot of student loans, right? So the first rule to money is get your money to compound in a shorter space of time. And if you're borrowing money, pay it back before it doubles. And that's a simple formula. You just take 72 and you divide it by the interest. The second rule to money deals with taxes. And boy, they got us on this one because most people have no clue how taxes work. So I'm going to make it real simple. If you have a checking account, savings, CD, stock, or mutual, you see this triangle is getting bigger. The more your money grow, the more taxes you pay. Simple. More money, more taxes. More money you make, more taxes you pay. Simple, right? So if you have your money here, again, you could have $1 million, but you're going to be paying a lot of taxes. The second rule, the second column talks about tax later. And boy, they got us here. I got an email over the weekend from my university talking about our 403B. And when I get these emails, I'm not like, I don't sign up for these things because I know better. But when I read the stuff that they're writing, like, I'm like, oh my God, like we're giving people a 403B, you know, we're matching it if they do 5%. And I have some faculty that are putting 10, 15. I'm like, oh my God, like this is crazy, right? So with these types of accounts, if somebody has a 401k, a 403B, IRA, these types of accounts, the only good thing is that you're saving for your future. So that money is going to grow. Yes, it will grow. But you got to ask yourself the question, how much are you going to get to keep? Right? Nobody's talking about how much you get to keep. Yes, it's good that your money is going to grow, but how much do you get to keep after taxes? Because you see, this money is taxed later. Uncle Sam is going to tax you later. He doesn't want to tax you on the seed when your money is little, 200, 300, 400. He wants to tax you when it's big, when it's 100,000, 200,000, 300,000. And obviously, the bigger the money, more taxes you're going to pay. That's it. So with these types of accounts, you have no idea how much tax. So you're growing this money, which is good, but now you're 60 or 65 or 69 or whatever your retirement age is going to be that you want to start accessing this money. How much do you get to keep, y'all? That's the big question. I spoke to a gentleman about a week or a couple days ago. He's 63. He worked for a reputable company, GE, and he's only going to have $1,000. $1,000 per month in pension. And that $1,000 has to be taxed because it is taxed later. It's a pension. So you see, with these types of accounts, it's good that people are saving money. If you have a 401k, a 403b, an IRA, a SEP IRA, annuity pension, yeah, it's good that you're saving, but ask yourself how much of that money, now that his has grown, how much of that money you get to keep. Because I don't want to grow my money to $1 million and I only get to keep 500,000 or 400,000 because a good chunk of it is going to go to Uncle Sam, right? So this is a problem. Now, the third bucket deals with tax advantage. And tax advantage is you pay the tax today, so your money grows tax-free. You pay the tax today on your little itty-bitty $200, $300, and your money is going to grow tax-free. So, now that you know the second rule, which deals with taxes, another simple way I'm going to show it to you is coming back to this $640,000 growing at 12%. If this $640,000 is in a tax later account, you don't have $640,000. It's $640,000 on paper, but Uncle Sam is going to take a good chunk in taxes. 40, 50, 60, who knows? You have no control of how much Uncle Sam is going to take. But you see, if this $640,000 is in a tax advantage account, like a cash value life insurance, because it is Life Insurance Awareness Month, and we're educating you on your life insurance. So if you have a life insurance or not, I already know you don't have this type. I already know. In my 5 years doing this business, I've yet to see one person show me I got an IUL. So if you had a $640,000 in an IUL, cash value life insurance, holy moly, that's $640,000. Now, if you had your $640,000 in a tax later account, let's say a 401k or 403b, it is not $640,000 because that money has to be taxed. How much? You don't know, and I don't know. Right? So it's very important to know where you're saving and growing your money, because depending on which one of these buckets it's sitting in, you could have more or you could have less. Third rule of money deals with investment. Guys, I didn't even know we had options when it comes to investment. If you put your money in the bank, it is safe. All day, every day, 24/7, your money is safe. But guess what? You're safely losing. How are you losing? You're losing to inflation. You're losing to inflation. Right? So, it's safe, but it's not going to grow a lot. That's why the growth is in red. It's safe, but it's not going to grow. So I'm Guyanese, and a lot of West Indian people believe in susu or in box hand. My mom grew up in it, and she tells me, girl, I bought a lot of stuff with this susu money. And I'm like, that's great, Mom. But you coulda, woulda, shoulda had more if you had it in a different vehicle. Because you see, when you give the money to the susu lady, and I'm talking to you guys that are IG, because I know some of you are West Indian and you guys love your susu lady and you love your box hand lady, but I'm going to put y'all onto some game, because that money is not growing any interest. In fact, you have to pay the susu lady money to keep it, right? So that is not stocking your coin. That's more like dropping your coins. And if you keep that up, you're going to be broke, okay? You're going to be broke. We don't want you guys to be broke, so this is why you need to get into Zoom, see what I'm showing you guys, and get in touch with us so we can help you be rich and keep that money, okay? So if your money's in the bank, it is safe, but it's not going to grow much because the interest is very low. And if you're giving it to the susu lady or the box hand lady, again, you're not growing any interest, right? You're not growing any interest. And 9 out of 10 times when you do draw your hand, what do you do with that money? You spend it. So if you keep that up, fast forward 65, retirement age rolls around, where's the retirement money? Hello, I'm talking to somebody out here. Where's the retirement money? Right? Now, what if you have the money in a variable account? Guys, Google the word variable. There is nothing safe about a variable. A variable means it's going to go up and it's going to come down. It's going to go up and it's going to come down. So you could have a lot of money. You could lose a lot of money. You're going to be up and down. It's like your blood pressure going up and down. You're going to be on a roller coaster, right? Or Coney Island, one of those rides on Coney Island. You up, down, up, down, up, down, right? So your money is not safe, but it could grow. I don't want to be thinking I got $1 million and then next month or next year or next 2 years, I'm broke. I don't want to be broke. That's why I'm launching my second book, launching on Sunday, September 5th. This is why you're broke. I don't want to be broke. I don't ever want to be broke. And y'all should never want to be broke either, right? But when you have your money in a variable account, you're going to be broke because you don't really know what's going to happen. Market is going to crash. Market is going to go down. And Uncle Sam is going to tax you. So are you really in control of your future? Guys, there's so many people right now in retirement wishing woulda, shoulda, coulda they had this information or they had done better with their money. Because you see, they made a lot of money. A lot of people made a lot of money. But because they don't know this information, they're hoping they don't outlive their money. They're hoping they don't outlive their money. Even in retirement, they're still stressed out. They got to be walking the grocery store aisles looking for sale because they got to pinch their money and hoping they don't outlive their money. That's not the kind of retirement I want for you guys. I want you guys to have a rich retirement, okay? Now, the third box deals with index. And index is the sweet spot. That's where the rich and famous play. That's the playground they're on. Their money is safe and their money is growing. Their money is safe and their money is growing. It doesn't matter what Bin Laden say, what Obama say, what Donald Trump say, whoever. Whatever they want to do with the country, whatever they want to do with the economy, whatever tax laws they make, it does not bother us. We don't care about that stuff. We ain't got to watch CNN because we don't care what's going on in the economy because our money is safe and our money is growing. Our money is safe and our money is growing. And there's only one place. There's only one place, one vehicle in the entire financial industry that gives you safety and growth. And those are life insurance products. Life insurance products gives you guarantee, safety. You will never ever lose a penny. And your money is also growing. How awesome is that? And why don't most of us know about these things? Why not? Why don't we know about these things? Because guess what? If we know about it, the banks are not going to make money. If we know this, the banks are not going to make money because where do all of us go to borrow money from? The banks. You want a mortgage? The bank. You want a car? The bank. Right? You want a credit card? The bank. So why would the bank educate us on this concept? If we know it, they losing. And as long as we don't know it, they winning. Right? So when people said to me, oh my God, Odetta, how come I never heard about it? Well, I don't teach this in class. I teach this to my student, but the campus, the university, they don't mandate personal finance. And why? Because if the student know this, student loan is going to be at a halt because people are going to save their money and they're going to know where to pull it out to pay off their kid's student loan. If they even rack up any, right? So guys, they know this stuff. They know this stuff. They just don't want us to know it. Because if we know it, it's a wrap, right? It's a wrap. They're not making any money. So it's not in their best interest to educate us on these things because once we know it, they're losing, right? So what does the IUL consist of? First of all, your money's going to grow. Your money is going to grow. There is growth. Your money can grow up to 15%, right? Your money is also safe. You are guaranteed never ever to lose money, y'all. Never ever lose money. That's why I don't care about watching CNN because I don't care what's going on in the economy. My money is good. It is not losing. I'm not losing money. I have a guarantee of 0.75, which by the way, the IUL guarantee floor is even better than the banks. Because the banks are not even giving us 0.75. The banks are giving us 0.0, okay? 0.06. I'm just saying, we just bringing the knowledge to you guys. A lot of people don't know this stuff. All we're doing is putting y'all on some game and teaching you money concept. So you could win this money game so you don't have to be broke, nor your kids don't have to be broke, right? And this money is growing tax-free. So you can touch this money tax-free, y'all. You can touch it tax-free. Anytime you have tax-free money, that's more money. I'm going to say that again if it went over your head. Anytime you have tax-free money, you have more money. You have more money. And it comes with a protection. So what are we protecting? First of all, you're protecting you while you're alive. And this is why a lot of people don't believe in life insurance because they see it as, I'm not going to benefit from it. I'm not going to get anything from it. I'm just praying for something. And when I die, my kids or my family or whoever get it. So that's one of the reasons why people have a negative connotation when it comes to life insurance. But I'm here to tell y'all today that there's different strategies. There's different types. There's cash values. There's savings. There's investment. There's long-term care. There's critical. There's terminal. Listen, protect you first. Protect you first. If you get sick, you got money coming to you. You ain't got to die. Protect you first while you're alive, right? Protect you first. That's why I have 4. And my unborn kids are already wealthy. because I know this stuff, right? How is it possible that my unborn kids are already wealthy and they're not even born yet? So all of you that have kids, your kids need to have one of these. I'm talking to you, Sky Amber. I'm talking to you, Carrie. I'm talking to you, Kayla. All of you guys on IG, all of you guys that are watching me on Facebook, I'm talking to everybody, and even those that are going to watch these videos later on. How is it that somebody who is single, don't have any kids, her unborn kids are already wealthy? Guys, this is serious stuff. So if you have a life insurance, get in touch with us so we can do a complimentary review and upgrade your policy. Because I already know, especially even if you're living in New York, I already know what you got if you're living in New York. I know the companies that are in New York. I know what the companies offer that are in New York. It is not an IUL, right? It is not an IUL if you're living in New York, right? It is not an IUL. So when you get an IUL, you're getting growth. Your money is growing. Your money is safe. Your money is tax-free. This is money that you can take out and spend on yourself while you're alive, right? And of course, if you get sick, God forbid, because who knew COVID was going to come? If you get sick, God forbid, you have long-term care. You have critical illness and you have terminal illness. What does that mean? You got checks coming to you. You got checks coming to you. So the light bill is still on. Your mortgage is still paid. And you ain't got to be fussing with Medicaid or whatever kid the government is doing. Right? You don't have to worry about those things. Your health is also protected. And you're also protecting your money. Right? So I'm going to show you what does an IUL look like. Let's say, right? Again, I'm going to go over these 4 boxes. You have growth. Your money is growing, right? Your money is safe. You have tax-free. Tax-free means more money. Catch the drift, y'all. Tax-free means more money. And you got protection. So you're getting all of this. You're getting savings. You're getting investment. Your money is safe. Your money is growing. Your money is tax-free. You got long-term care for your health. You got critical illness for your health. You got terminal illness for your health. And you protecting your money. So you got all the benefits for you while you're alive. And yes, God forbid, when that time comes, we leave it to the next generation. True story. One of our team members, right? One of our team members, we got a text. One of our team members passed away 2 days ago. Husband passed away 2 days ago. Heart attack. This individual who is part of our organization, 3 years ago when she joined the company, we have to do what we call 3-3-30. That's the first promotion. You start with us, you hit your first promotion by getting 3 accounts, 3 members. Typically, all of us, we want to make sure we start with ourselves. We protect ourselves. When I first started with WFG, I wanted to save money. And when they showed me the strategy, how my money is going to grow, how my money is going to be safe, and I get these living benefits, I didn't even think about the life insurance part. I was just looking at the tax-free, the money growing, the money invested, the money safe. If I get sick, I got money coming to me. Like, that sold me. That sold me. I didn't care about the life insurance part, right? But guess what? Going back to this individual, 3 years ago, the wife came on board. She started the business. She had to do her 3-3-30 like all of us have to do. Get 3 accounts, 3 members. Most of us, those 3 accounts are going to be our own personal strategy because we want to make sure that we protect you first. Her 3-3-30 was her husband and herself. Fast forward, last year, COVID hits. COVID hits. She called us. She said, listen, money is tight right now. I'm going to have to cancel this policy. We convinced her not to cancel the policy. She ended up letting go of hers, but she kept her husband. 2 days ago, her husband died. 2 days ago, her husband died. For the 3 years that he had his IUL, he paid in $17,000 in premium. Y'all want to make a bet, or y'all want to make a guess how much money is going to be paid out from Transamerica to his wife and his kids. And by the way, he was the sole breadwinner. He paid in $17,000, 3 years. Now he's dead. God rest his soul. Can anybody make a guess of how much was this person insured for? Put it in the chat. You guys can participate too on IG and Facebook. Put it in the chat. How much do you think? 3 years ago, he started the policy. Oh, you guys are cheating. That's because you read it. You read it in the group chat. You read it, right? You read it. I see you guys are reading. That's good. You read it. Okay. 500,000. $500,000, y'all. I almost want to curse. I get excited. $500,000. What is $500,000 going to do at a time like this? At a time like this? What is $500,000 going to do to his wife, or his wife and his 2 daughters that he leaves behind? Don't ever cancel your policy. Don't you ever cancel your policy. Pay for it. If you have to reduce it, I'm Guyanese. If you have to eat salt and rice, saltfish and rice, egg and rice, butter and rice, beans and rice, if you're Spanish, if you're Jamaican, whatever you guys, whatever the food is, don't you ever cancel your policy. 500,000, $500,000. So many people will never ever in their lifetime see that kind of money. My parents never saw that kind of money, and they work hard. So many of us are going to work so hard and will never ever see $500,000. And y'all, that $500,000 is tax free. Uncle Sam can't touch it. That $500,000 is tax free. What did I say about tax free money? Tax free money means it's more money. That $500,000 is tax free. Not a penny of it is going to go to Uncle Sam. What is $500,000 going to do for his wife and his 2 girls when he was the sole breadwinner? This is powerful what we do, guys. This is powerful. And this month being Life Insurance Awareness Month, all of y'all, if you got a policy, it's a bogus policy. I can tell you right now, especially if you live in New York, because I know all the companies in New York. Every one of them I know. I study the competition. I know what they have. You just tell me the company name, I know what they have. None of them carries an IUL. None of the companies in New York carries an IUL. So if you know somebody that lives in New York, have them get in touch with us so we can do a free policy review and upgrade that sucker. Yes, I said it. Upgrade it. Upgrade it to something that's going to grow their money. Their money is safe. Their money is tax-free, right? And they get critical long-term care terminal. Super important for your health if you get sick. Because guess what? Statistics show, not me, not OdetteKing.com. I didn't say it. I'm just reading because I'm a reader. Statistics shows that most people will get ill before they die. Most people will get ill before they die. And there's some people, they're going to be sick for a very long time. I know somebody right now has a stroke for 9 years, going on 9 years. He has a stroke. 9 years. How do you think his mortgage is paying? That's super stressful, right? So, it's a super big deal, guys. Now, the IUL gives you a cap and a floor. The cap is 15%. The floor is 0.75. So, let's look at the investment part in the IUL. If you had $10,000 right here, right? If you had $10,000 saved in the stock market, year 2001, your money dropped to $8,396. But because you got an IUL, your money grew to $10,075. In 2008, when it was a bloodbath, negative 40 in 2008. Your money grew even lesser. Now you're down to $7,000. The person who got an IUL, They still growing, 18,000. I'm not gonna go line by line. I'm gonna come all the way to the bottom. 2020, last year. These are actual numbers, y'all. We're in the financial surveys. These are actual numbers. 2020, your 10,000 would have grown to 19,000. And because this is a tax later account, this 19,000 has to be taxed. It has to be taxed. So you still don't have 19,000. It's 19,000 on paper, on your statement, but this 19,000, Uncle Sam is coming for his taxes. The person who has an IUL, his 10,000 grew to a whopping almost $50,000. And y'all, this is tax-free. This is tax-free. So his money grew to $50,000, and he still got life insurance. He still got long-term care, critical and terminal. Get in touch with the person who invited you. If you have a life insurance, get in touch with the person who invited you. Those of you that are social media watching us live, get in touch with us so we can do a free policy review. It is Life Insurance Awareness Month. Just like how your cell phones have been upgraded over the years, you need to upgrade your policy. You need to upgrade your policy to something that's going to be more robust and to something that's going to benefit you while you're alive. Because I'm going to say right now, a lot of y'all got dead policies. A lot of y'all got dead policies. And what do I mean by dead policies? You ain't getting nothing while you're alive. It's a dead policy. It's only going to pay out when you die to your ears, right? So you could stay with that. It's good, but let's level you up, right? And show you a better policy where now you're saving your money, you're investing your money, you can touch this money, you can access it while you're alive, tax-free. And if you get sick along the way, oh boy, you got money coming to you if you get sick, right? You got money coming to you. And if you have kids, you need a will. If you have a bank account, you need a will. So all of this you can get in your upgrade. So get in touch with the person who invited you. We're super excited. We're going to be talking all month about life insurance. Monday is our money making Monday. On Monday, we talk about, of course, life insurance again, but we're going to be showing you guys the business side. We're always looking for people like ourselves to share this information with our community and make good money working from the comfort of your home. So if you know somebody who wants to come on board, get their license, and hit the ground running, help families and help themselves and make a whole lot of coins. Okay, stack a whole lot of coins along the way, helping families, doing the right thing, and have them get in touch with us. If you know somebody who has a life insurance or they don't have a life insurance, have them also get in touch with us so we can help them. It's Life Insurance Awareness Month. Don't play yourself, pay yourself. And with that being said, I am out. We'll see you guys back here on Monday for our Money Making Mondays. If you know anyone who wants to make money, have them get in touch with us so we can show them and share the opportunity as well. Have a good night, guys. Thank you so much.
Thank you. Good night.
Good night.